right, welcome to our info session today, hosted by Wealth IQ Group, the Complete Investor, and the Gold IQ Group. The big question, did the Fed just guarantee the price of gold? Could this be your last chance at $4,000 an ounce? So, just a quick disclaimer, this is for education purposes only. You do take market risk, whether you're buying, trading, investing, however you're doing it. Past performance is not indicative of future results. As much as and convincing as Drew is, he does not have a crystal ball. So he's going to give you some education. He's going to teach you things to look at, but you have to make your own decisions, and you are responsible for your own decisions. I'll jump to the next one. All right, guys. This is Mikey Z. I am 25 years in the financial industry, former investment banker from one of the largest institutions in the world. I'm founder, owner, and operator of multiple trading, education, and software companies. But what I like to say is I'm not only the president, I'm also a client. All right. It isn't just about Hair Club for Men here. Drew is an extremely bright guy. And I like to learn from Drew just like a client would. So let's talk about Drew, right? He is in the finance industry for over 20 years. He's an investment grade metals analyst for over 10 years. And now a trick here, guys, and I want you to understand why this is really important. He's been at the board of trade. He's done all those other things, but I want you to, that third one down there is the most important. He's not a salesman. He has helped thousands of people safeguard their retirement accounts. Okay. That is a lot different than selling people gold. You guys can go online and find a bunch of gold salesmen, but finding someone that will help you safeguard your retirement accounts, that's the big difference. So he does stay as the chief metals strategist for Gold IQ. He is the managing partner at the Complete Investor and a decorated U.S. Marine with 8 years of service. Thank you for your service, sir. Ladies and gentlemen, Drew Eurosek.
Thank you so much, Michael. And I really do enjoy collaborating with you and Wealth IQ Group, specifically the Gold IQ Group division of your company. You curate some of the best content for investors, really to educate and make great decisions with your money. Because at the end of the day, you want to make sure your money is working for you, getting you the best return, the safest return, and protecting yourself any way you can. And there's a lot of information I'm going to go over tonight. Again, get something to write with. Probably the most important recent development in economic news. But first, we're going to talk about, why does gold go up, right? Maybe you've looked at gold in the past. Maybe you own gold and you don't really know, why does it go up? We're going to go over that detail. What does strong technical support look like? And then people don't realize this, or if they do, they don't remember. The Federal Reserve has two mandates. The first mandate is jobs. They want to make sure that as many Americans are employed as possible. Number two is a stable inflation, right? Or no inflation, ideally, or very stable inflation. Actually, they do want some inflation, but they want price stability. Those are their two mandates. Now, out of those two, which one do you think is the most important? Jobs. Why? Because that's how we get our tax revenue as a country, right? People working. Plus, people that don't work tend to rise up and revolt, right? So we want as many people working as possible. We do have some serious inflation signals that have come out that is going to really, in my opinion, guarantee the price of gold. Now, you make your own decision from what I show you, do your own research, but I think you'll agree the information I'm going to share with you today is very powerful. Also, there's two ways you can buy gold. You can buy gold inside your retirement account, tax-free, penalty-free. You don't lose any value, just move from paper to physical assets. And then also you can buy direct delivery. Nobody, I've been doing this since 2010. I've been in gold myself personally since 2010, okay? And I don't know of any other company out there that delivers gold faster, safer, more effectively than us. Gold in your hands in 1 to 2 days. And then we'll have a question and answer session. We will also post my personal calendar. If you want to meet with me one-on-one, feel free to do so. No obligation. Get your questions answered and have a casual conversation about gold, how it might be a fit for you. And I will tell you, I talk to about 100 to 150 investors every single month from all over the country. Gold is not right for everybody. I'll be the first one to tell you, hey, it's not right for you. But if it is right for you, and you want to find out more, have a conversation with me, and I'll give you all the ins and outs and all the information you need to make a great decision with your money. Okay. And then again, we'll have a question and answer. Now, why does gold go up? Now, I actually going to pop out. I know, Michael, you don't like when I pop out of the screen here, and some people don't, but you can go to usdebtclock.org, usdebtclock.org. This is the reason why gold goes up. Our debt. As our debt increases, we get farther and farther removed from the real value of money because our currency is a fiat currency. It's not tied to our debt. It's tied to our ability to pay back our bills, right? We borrow money. Our chances of paying back go down when we increase our debt. We become a higher credit risk the higher that we go up in debt, which makes us not only a credit risk, but a default risk. And you can look up the term Great Reset, and you'll see a lot of scary information out there in the marketplace of what will happen if we default on our debt. And every time we borrow money, the chance of default goes up. And why is U.S. debt the most important barometer when we look at gold's value? Because we're the linchpin that holds everything together. If we default on our debt, the whole system crashes. So gold goes up with our debt. And keep that in mind. I'm going to share some information with you. And you can, again, look back since we've been off the gold standard. Gold goes up with our debt almost in lockstep. And that's the number one reason why gold goes up. Now, there's other economic reasons, right? And I'll go over those in a second. But that's the number one reason why gold goes up. It's our debt. It's also a hedge against inflation. It's a physical asset like gold and real estate, something that is actually real. Everything is a derivative off of those two assets. It's private. You can actually own precious metals that nobody has to know you have. Even the IRS says there's specific coins you can own that are deemed non-reportable, which means while you own them, you don't have to tell anybody that you have them. Me as a dealer, I don't even have to tell anybody that you bought them from me. And then limited in quantity. A lot of people don't know this. You can actually fit all of the gold in the world in 2 Olympic-sized pools. That's it. That's all there is. So those are the reasons why gold goes up. Okay, and the first one being the most important, our debt. Now, what does strong technical support? Why is 4,000 so important? Because again, today's webinars is, did the Fed just guarantee the price of gold, and is 4,000 that minimum value and go up from here based on the information I'm going to share with you tonight? And I'll go over all those details, but let's look at what strong technical support looks like. So a lot of people don't know this. Technical support is when a price breaks through a level and then it tests that level and bounces, okay? That is support. Not just going up and hitting a level. It has to come down and test that level. And it has tested that level, and that's now a year ago. So let's look at the last 3 months since this war hit. We had it test here, here, and here, and bounce all 3 times. To me, that is great support. So 4,000 gold has endured a lot of headline news and a lot of short-term, oh my God, what's going to happen in the world, right? And that is powerful to me. If gold can handle these levels of uncertainty, the war in Iran, right? Interest rates and a Federal Reserve decision to either raise rates or lower rates going into the end of the year. That's the big news right now. So 4,000, in my opinion, has great support after all of these major headlines that have come up recently. So that's what support looks like. Now, I also want to show you, and I'm sorry, I didn't mean to come out of my screen here. I also want to show you, and anyone that's seen my webinars, especially in the last 3 months since this war hit, I bring this up because some people are like, well, Drew, it went up so fast and then it came down the last 3 months. Yes, and almost like it did in 2016. So I've been in gold myself personally since 2010, okay? I've worked for two of the top three gold dealers in America before starting my own company, and I've helped thousands and thousands of people protect millions and millions of dollars of their retirement account with real physical precious metals. So I've seen a lot over the last now going on 17 years. And in 2016 specifically, and this will always be part of my memory, and I apologize. The doggies are barking at someone at the front door. I bring up 2016 because you can see here at the end of 2016, gold just started jumping. And I got into gold in 2010. And my wife would not get into gold. She was like, nah, I'm not into it. I'm not. My wife. So I've been in gold since 2010, been talking to her since 2010, and she's like, no, I'm not having it. Okay? She finally gets in when she sees gold going up like this, like crazy. Kind of looks like last year, right? Gold's going up like this, right? Everyone wants to get in. As soon as she gets in, it drops by almost 20% in like 3 months. Nobody wants to see their value of their assets go down that fast, right? In the short term, market, yes, gold can go up and down, up and down, up. But the long-term debt, as it goes up, gold goes up. And you can just look at the history of gold since we came off the gold standard. If we increase our debt, gold goes up. We get farther and farther removed from our ability to pay back our bills every time we borrow money. And we're now nearing $40 trillion in debt. So you can see, obviously, over the last 10 years, what gold did. And that's all that's really happening right now. We've got the war in Iran, right? We're cutting off 20% of the world's oil. I did webinars on this. Every time oil went up, gold came down almost by the exact percentage. Short-term interest rates. The Fed's going to raise rates because we got to get inflation under control, right? So again, short-term money can go into short-term bonds, 1 to 3 years, make a quick return while the Fed's going to be raising the rates. We're raising rates. These are all short-term knee-jerk reactions that will go away. And the prevailing direction will be up just based on our debt and based on history. So that's why I really want you to see the support level at 4,000 because it reminds me of 2016. Yeah, we had a pullback. The markets don't ever go straight up, but we have now tested this level of 4,000 in the worst of times. A huge war for now going on 4 months, and the Federal Reserve saying they're going to raise rates, right? So now what happened? Because this is the most important signal I want everyone to pay attention to. I apologize. Every time I use my drawing tool, it kicks me out of my screen. Okay. The jobs report. So remember the two mandates the Federal Reserve has, right? Jobs and price stability. And jobs is the most important. So July 2nd, we just had one of the worst jobs reports we've had since the pandemic, okay? We were expecting to create 110 to 115,000 jobs. You can see this here if you can see my cursor, right? We only added 57,000 jobs. That's like the worst since, again, the pandemic, 2020, okay? We also had a downward revision of the prior 2 months. And I'm going to little note on this. And we lost 700,000 people. Just magically, 700,000 people stopped looking for work. They gave up. That's a lot of people, okay, on one jobs report. Now, I want everyone to know the jobs report is criticized for being faked, and understandably so. Are you ready for this? All of the jobs reports for President Trump's current term, except for one, have all been revised down. Why is this important? Because that's where we get our taxable income as a country. The revenue that we bring in to pay our debt comes from people working and paying their taxes. If we are drastically losing jobs, we are drastically losing income to pay our debt. This is important. This is very, very important, and why I think the Fed just guaranteed the price of gold. And again, $4,000 level being so important. By the way, also, all of Biden's last year, I think every one of his jobs reports were revised down. 818,000 jobs. Basically, our country lied we got when we didn't get them. Every jobs report for 12 months under Biden was fake. We lost jobs 100% under his last year. And then if we add Trump's first year of his term and all the revisions down, we haven't created jobs for almost 2 years. That's insane. That means we are losing, and I think these numbers are worse than they're posting. That means we are losing our income as a country at a drastic rate. Now, you ready for this? This jobs report came out July 2nd. Look what happened to gold when that news came out. Look at that vertical spike. 2% increase in like 10 seconds. Why? Because we realize we're not going to be able to pay our bills. We don't have enough employees paying taxes to even come close to paying this $40 trillion in debt. And you can see it obviously spiked from then on. That was the first shoe that dropped. That shows the Fed is screwed. They can't raise interest rates. They can't raise interest rates because it will kill jobs worse than they're already being killed. We can't afford to keep on raising interest rates because employers won't have the money to hire people, right? As a matter of fact, I think they are going to drop rates, which is crazy because that means we'll be dropping rates into inflation. Almost the kiss of death when it comes to price and price stability. Watch this. So the Federal Reserve had their big meeting in front of Congress after we had our CPI report on July 14th. And everything looks great to them, okay? Everything looks great. Oh my gosh, the 3.5% CPI, which is the inflation rate they look at, was 3.5% instead of 3.8%. Oh, and core CPI, which is, oh my God, regular CPI is BS. Core CPI is so far removed from real inflation, but they use that more and more. And they say it's only 2.6%. That means, oh, year over year, we're only growing at 2.86% in costs. Our costs are only going up. They are doing this on purpose so they can say that inflation's under control so they can lower rates. Wait a minute. They were talking about raising rates 3 times by the end of the year to control inflation. And all of a sudden, the CPI report looks so great. By the way, I want everybody to erase CPI from your calculations of how inflation is because it's not real. It's so far removed from real, it's almost comical. CPI doesn't include housing, insurance, healthcare, childcare, any kind of auto repairs or auto costs, including gas for your car, groceries, property taxes, and let me tell you right now, the number one increase to households in America has been the cost of your insurance for your car and your home. 30% in just the last 2 years. Gas prices doubled this year alone. Doubled. This number is so far removed from reality. We are averaging, and I did a webinar on this. If you want to see it again, it's called Stamps Don't Lie, because it's a calculation based on our stamp prices in America and how they show the true inflation, and we are near 10% inflation a year for the last 5 years. Now, why is this so important? Because if we lower rates, lower interest rates into this steep inflation, everything is going to be out of control. We're going to move into hyperinflationary times like you wouldn't believe. Just look at other countries that have lowered their interest rates into inflation. Ready for this? Turkey. Look at Turkey's market or their economy and how bad their inflation is. And they are lowering rates and have been into inflation. And look what's happened to the value of their currency and their destabilizing of their economy. Okay, Japan, right? Again, hyperinflation. The cost of regular living is so through the roof that people aren't having kids and they have to pay Americans, or foreigners, I should say, to come to Japan. They're paying people to come to Japan. And if you get married to a Japanese woman and have a baby, they give you like 75 grand. Because again, nobody's spending money because it just costs too much to live in Japan. If we do that, the value of gold could skyrocket from here. And I say that with facts. Watch this. When we had the Federal Reserve speak in front of Congress after we had this CPI report, which is completely fake, right? Inflation is completely out of control. Look at the price of gold. Just from that news right here. If you can see my cursor on the right side of your screen. It's vertical. It's vertical. So yes, there's this short-term play with oil, right? There is some money moving into short-term treasuries, but the long-term prognosis, in my opinion, and why I'm showing you all of this, is that the Federal Reserve is trapped and they're guaranteeing the price of gold. Why? Because they cannot raise interest rates. And as a matter of fact, I bet they lower interest rates. And doing that into an inflationary period is only going to cause hyperinflation. And guess what? Gold is the best insulator and has been for 5,000 years from currencies getting out of control, fiat currencies getting out of control. Little fact, and I did a webinar on this too. The average fiat currency, which is based on credit, not assets. It's based on our ability to pay back our debt, right? Our promise to pay our debt. They only last 50 to 75 years. Over 800 currencies have failed over the last 5,000 years. They never last, and they only last 50 to 75 years. Guess how old the US dollar is? Now, some people say, well, it was 250 years. We just celebrated 250 years as a country. We came off the gold standard in 1971. We formally came off the gold standard in 1971. That's right now about 55 years. The average fiat currency only lasts 50 to 75 years because this debt gets so out of control. They end up having to do a reset. And again, you can look up reset. There's so many different things, scenarios posted online, credible people, economists that talk about how we're going to get this great reset. And when we go to this great reset, what do financial institutions use to reset the value? Real assets, gold, real estate, and has been that way for 5,000 years. Now, there's two ways to own gold. You can actually own gold inside your retirement account. A lot of people don't know this. It's a tax-free, penalty-free move. You can take any money that you have in a qualifying 401k or IRA and move it into gold. You lose no value. You're just moving from paper to physical assets. And why, again, might you want to do that? We're nearing $40 trillion in debt. Every time we borrow money, the chance of default goes up, not down. And physical precious metals is not tied to our debt. It's got its own sovereign value that's globally recognized, and it's not taxed the same. Not taxed the same as stocks, bonds, mutual funds, CDs, annuities, even cryptocurrency. And I'm sure everyone on this call would rather have less in taxes, especially in retirement, than more in taxes. Am I right? Also, physical precious metals in your retirement account. You need to hear this. Is 100% insured with all risk coverage. Has anyone ever looked at the bottom of their brokerage statement? It's going to say these words. For your traditional investments, stocks, bonds, mutual funds, CDs, annuities, even cryptocurrency in your retirement account. At the bottom of your statement page, you will see these words. These investments have no insurance, can lose 100% of the value. Well, wait a minute. Why do you think they can't insure your investments inside your retirement account? Kind of weird, huh? Why can't they insure the investments inside your retirement account? Because you don't own them. You only have beneficial interest. You get the benefit if the investment goes up. You get the benefit of the investment if it goes down. But you don't own the investment. And they can't insure something you don't own. Physical gold in your retirement account is 100% insured with all risk coverage. Why? Because number one, it's real and you own it. And last but not least, physical precious metals. can't be hacked. You can't hack a gold coin. And cybersecurity threats are not going down. They're only going up. I mean, I just read an article, I think it was in Bloomberg a few months back. They're calculating, they meaning data scientists are calculating that cryptocurrency will be hacked by quantum computing in the next couple years. So the most secure investment, supposedly, right? Cryptocurrency, right? Blockchain format. All of the investments are spread over thousands of computers on ledgers all over the world, right? All these computers. So you can't hack a million computers. So cryptocurrency ipso facto can't be hacked. They're saying no, quantum computing is going to be able to hack cryptocurrency like Bitcoin in the next year. And guess what? You can't hack a physical gold coin. So you can own gold in your retirement account. Also, you can own gold in your hands. Like you can take possession, right? You can take any cash you have and convert it into gold. Now, I have been doing this. I've said this a couple times now on this call. Michael said this in the beginning when he introduced me. I've been in gold myself personally since 2010. I've worked for 2 of the top 3 gold dealers in America before starting my own company. I don't know of any company that delivers gold faster, safer, more effectively than me. Gold in your hands in 1 to 2 days, fully insured. So you can take any cash you have, move it into gold. Now, I do want to pop out real quick. If you go to my website, and I think this is important, because I don't push anyone into anything they don't want to do. You can look up client reviews. Now, these are the reviews I put on my site. So I encourage you. You can go to Drew, just type in any search engine, Drew Urosek Gold, and you will see I only have 5-star reviews for my clients. Now, why? I personally believe this is the reason. Number one, I never push anyone into anything they don't want to do. Okay? I educate. I inform. And then I support. Number 2 is I back you in whatever your decision is. And again, it might not be getting gold. And then 3, I support you. You know, I'm available to you to support you. And that's not only on the front end, on the back end. I'm a full service dealer. Out of like 2,000 some hundred, listed dealers in America, only a couple hundred are full service dealers. I'm actually there on the back end if you ever want to liquidate. And I can liquidate you fair market value, no discounts, no penalties, no fees, and cash you out usually in 1 to 2 days. So, I'm there for you, full service support. And that's why I feel I only have 5-star reviews for my clients. Now, you can check me out on thecompleteinvestor.net. You can scroll down to any page, by the way, any bottom of any page. If you want to meet with me, fill out a form. We can meet, no obligation, to spend, 20, 30 minutes with you, talk about your personal situation, make sure, you understand how gold works. Again, all the features, benefits, tax differences. If it's right for you, great, we'll move forward. If not, hey, at least you got some really good information about gold and how gold works, right? Especially gold in your retirement account, because a lot of people don't know that. That's pretty much all I have for this. I do have time for a question and answer session. I think we can also put my calendar link in the chat. Are you still there, Michael?
I'm right here, sir. How are you?
Can you put in our chat my meeting link? So this is an up-to-date link. Anytime you want, you click on it. It's up to date. Meet with me one-on-one. Talk about, again, your personal situation. Answer questions about gold. Go over features, benefits, tax differences. What it means for you personally. Does it work for you? Does it not work for you? I usually can. We'll know in the first 10 minutes, if gold's right for you. If it is, great. Again, we'll move forward. If not, hey, at least you got some really good information about how gold works in the marketplace. Because I would say if I talk to 10 investors, 9 of them don't know how physical gold works, because it's a lot different than paper gold. So I'll open up the room for any questions. Michael, if you had any comments, I know you've been sitting kind of quietly in the background there.
You just do such a great job, man. I like to listen to you. So I just put that in the chat for anybody that wants to jump in. All right.
I see John's on here. Hey, John, how you doing, buddy? John Parlberg. I know. I hope you're enjoying your summer. Demi, I haven't met you before. I hope you're enjoying your summer as well. Any questions?